This is the Asia Trade. I'm Paul Allen in Sydney.
I'm Haidi, Stroud-Watts. The top stories this hour. Treasury's rally as weak US services data adds to bets on 2 Fed cuts this year. Chips are in focus as the White House works to renegotiate global deals with manufacturers.
Elon Musk stepping up his attacks on President Trump's tax package, urging Americans to kill the bill, which he says could bankrupt America.
And it is crunch time for Nintendo as its Switch 2 console hits the stores with hype and high stakes for the Japanese gaming giant.
All right, let's take a look at what's in store for the trading day ahead. We're an hour away from the open of Australia, Japan and South Korea. We've got futures here in Australia looking kind of flat at the moment. Nikkei futures just off by a few points. We have the yen continuing to strengthen right now, 142.76. Just getting some breaking news as well out of South Korea, as you see on the screen there. GDP numbers for the first quarter. This is a partial reading, a contraction of 0.2%. That was very much in line with what was expected. The annualized figure, however, flat. We were anticipating that would contract a little bit more of 0.1%. The biggest drag on Korean GDP was construction. That contracted 12.5% on year. Manufacturing contracting 0.6% on the quarter. But in terms of an annualized figure, that's still seeing an expansion of 0.4% on year. A little bit of concern as well among the market, particularly the bond market, about just how much the incoming president intends to spend. We saw yields on 10-year sovereign South Korean bonds jumping to 2.9% due to concerns on rising government debt, Haidi.
Yeah, a lot of these concerns playing out in the bond market. Right, take a look at how we're tracking when it comes to US futures. We saw a gauge of global equities touching a record high after some pretty modest gains on Wall Street. We are seeing that looking pretty muted in that futures session. Trading pretty flat at the moment, a bit of downside there both for the S&P futures as well as Nasdaq 100 futures, and watching sort of treasuries as well. As Paul mentioned, a lot of focus still in that space. Treasuries, we actually saw rally on the back of some pretty tepid US eco data, just kind of reinforcing those expectations that the Fed could cut potentially twice this year. Also watching oil, we're seeing that pullback about 0.3% softer there. We're seeing that Saudi Arabia is wanting more supersized OPEC plus hikes in that continued push for market share. So that is weighing into this after what has been several sessions that's been dominated by some of the more geopolitical elements of this dynamic. Well, US Commerce Secretary Howard Lutnick says the administration is reworking agreements with chipmakers under Biden-era legislation to secure better terms and generate additional domestic investment.
With respect to chips deals, we are improving those commitments to more than $300 billion, doubling the previous investment of those companies receiving CHIPS Act awards without costing the United States taxpayer a single additional dollar.
Let's bring up Bloomberg editor John Haidi, who joins us out of D.C. And John, so President Trump had asked Republicans to repeal the CHIPS Act. How likely, is that likely to occur now?
From Secretary Lutnick's testimony, probably not so likely. President Trump often, both in this administration and his previous one, takes a dim view of the legislative accomplishments of his predecessors. But the CHIPS Act, passed, of course, under President Joe Biden, was approved with votes from both parties, Democrat and Republican. And there's very little enthusiasm at this point to repeal this act as $52 billion in subsidies, along with investments by TSMC and Oracle and various other companies are at stake here in many different states, both that voted for Trump and did not vote for him.
We've also got Elon Musk making increasingly strident and colourful comments in opposition to Trump's big, beautiful bill. How likely is this to damage the bill's progress as it moves through the Senate?
Call your senator, call your congressman, kill this bill. If there's not a rift between President Trump and the world's richest man, it's hard to make that distinction. So but the president assures everyone that, or the president rather, uncharacteristically has not made any criticism of this attack on his one big beautiful bill, but his allies in Congress on Capitol Hill, House Speaker Mike Johnson and John Thune, the Senate leader, have made it pretty clear that they're moving forward despite all that Elon Musk has done for their party, with or without him. Now, the president called Republican senators at the White House just a few hours ago, and one of them, Roger Marshall, a Kansas Republican, said Elon Musk never really figured in the conversation. So it may come down to this. Many Republicans, or probably a minority at this point, but a significant number because the margins are so narrow, have misgivings about this bill because of its cost, because of other considerations, and this this attack by Elon Musk may weigh on their concerns. Now, will it damage the bill? We don't know. One other thing that was not mentioned by Elon Musk was the whole salt tax donations, or the salt tax deductions that the Senate is saying will have to come back down after a very careful agreement in the House. That could present some real problems for the bill going forward.
All right, Bloomberg editor John Haidi there. Well, weaker than expected U.S. services activity data has reinforced bets that the Fed will cut interest rates at least twice this year to prevent a recession. For more, let's bring in senior editor for markets and Bloomberg opinion columnist John Authers. John, are we seeing a little bit of a disconnect here between what the market is pricing and expecting and what we're actually hearing from speakers of the Federal Reserve?
I'm not totally sure about that. I think that what we're seeing is a massive time lag problem because people in the real world making decisions for their businesses can't make the same taco trade, assuming that Trump will always chicken out, that people in financial markets can. So the latest wave of data that we're getting at the moment is coming. We also had the Beige Book and we also had the ADP payroll data, which we had quite a trifecta of generally pretty negative. We hear about the US today, but it all comes from a period when conversation was completely dominated by tariffs, when companies had previously brought forward their big orders and were now more concerned to wait and see. So unfortunately, I think the Fed is probably justified in needing to see quite a little more, and putting that differently, the market is justified in saying there's really no way the Fed is going to have confidence about the need to cut until September. I mean, it's still ultimately a belief that the Fed is going to have to be considerably more hawkish than most other central banks or developed market central banks around the world.
John, you've got to be wondering what those in the halls of power in Beijing would be thinking about the taco trade, right? Particularly as we get this sort of, late night lamenting from President Trump about how much he likes President Xi, but how difficult he is to make a deal with. What are markets sort of doing with the to and fro and the uncertainty when it comes to this set of trade talks?
I mean, remarkably little. It's quite interesting that I'm trying to piece together. I'm working on my column tomorrow as we speak. There is this, but there is also Ukraine and yet another round of very interesting developments on Ukraine. After a certain point, markets lose interest. Liberation Day caused intense excitement, and now there seems to be a belief that we can safely ignore this, just as there has ultimately been a fairly clear belief as far as markets are concerned that they don't need to be too worried about what has been happening in Ukraine for getting on for 3 years now. I am therefore worried, you can use the taco analogy as much as you like, whether this means we're going to choke on our tacos or whatever. But the assumption that the president, who obviously genuinely does believe in tariffs, does believe in protectionism, and who obviously really hates the idea that he chickens out, that the team is a pushover. I am still not clear exactly how the president gets out of this without leaving in place some tariffs that the markets are going to really dislike. But I guess it's still deniable. The animal spirits have turned, and there is this belief that he does always chicken out. I'm not sure we have enough evidence that he will cave for markets to be rallying the way they have been.
Bloomberg's John Authors there in New York. Well, coming up on the Asia trade, we'll be asking Ashton Analytics about the likelihood of that call between China's Xi Jinping and President Trump, of course, now centred on this critical call as to the next steps for progress in this trade détente. Plus, TECHnalysis joining us a little bit later on to unpack today's release of the Nintendo Switch 2. Later on Inside with Haslinda Amin, the former Australian Prime Minister Malcolm Turnbull weighs in on President Trump's efforts to reshape the global political and economic landscape. That conversation at 11:15 a.m. in Hong Kong, 1:15 p.m. if you're watching here in Sydney. This is Bloomberg.
President Trump says Vladimir Putin has warned him that Moscow plans to retaliate against Ukraine following recent drone strikes deep inside Russian territory. Trump and Putin spoke by phone as US efforts to broker a peace deal show signs of stalling. For more, let's bring in Bloomberg's Michael Heath. Michael, no surprise really that we'd expect some Russian retaliation here, but in some respects, does that clear a path for tougher US sanctions as well?
Well, you'd imagine so, Paul. The stage is set there, and yet we got no sense of that from President Trump as well. And this sort of extraordinary situation of him reporting that Russia will retaliate, severely against Ukraine. I mean, Russia has been bombarding civilian areas, etc. I mean, the notion that it needs to retaliate further is sort of a bit strange. But, this is the president of the most powerful country in the world talking to basically a regional power. You'd imagine he'd say, don't do that, or try and insist on talks or something. It's almost sort of what he's just reporting on what Putin thinks about, events, especially when we talk about Iran as well. So, yeah. Unusual, but I guess we'll just have to see what Russia does. But you'd imagine he would have warned him not to do that. It was really quite surprising. They do have serious sanctions there, but again, every time President Trump talks to Putin, he seems to be more enamoured and just doesn't have, there's no strength there given it provided at all.
These developments when it comes to North Korea is interesting, right? This sort of, strong level of support that's been pledged by North Korea to Russia and all its, quote, international issues. And it comes not really much long after we actually saw North Korea acknowledging that they have troops in these international battles.
Yeah, I think, look, my sense is that North Korea is getting a lot out of Russia for this. I mean, North Korea has these massive ammunition supplies, all these armaments that that will basically allow Soviet weapons to be used constantly, all those compatible bullets and shells and that sort of thing. So it's really in Russia's interest, but I think North Korea is getting probably a decent amount of technology from Russia there. It still has Russia still has a good technology gap there with North Korea, and Kim's regime getting access to that would be perfect for him. I mean, in a sense, the strange thing about 25 years ago when Putin came to power, people were sort of trying to bring North Korea towards the West. It almost looks like Russia is turning into a larger and milder, but heading more towards the North Korea direction, where it's just a large spoiler, powerful, important, but very, very difficult to reason with as well.
It's interesting when you talk about almost the neutrality with which President Trump passed on that message, right? Just the messenger. What do we make of his foreign policy at the moment? He's obviously got a lot going on, both in terms of Ukraine, Gaza is still ongoing. This North Korea, relationship is interesting, right, given we saw the Trump-Kim summit in the previous administration. Is there a sense that he's sort of being overwhelmed at the moment, or what's the strategy?
I mean, look, in fairness to President Trump, it is an extraordinarily volatile period, and there's, whoever was in power was going to really, really struggle with this, and there's no particularly obvious solutions to these issues. But his efforts with Russia. I mean, sort of you can see the flickers of realisation coming through there when he gets frustrated with Putin that the personal relationship is going to mean nothing. Everything in Russia is about interests, and as I've said before, they respect strength. But in the end, the US is going to, if it wants to get something done there, it's going to have to put more pressure on Russia. But you know, when it comes to Israel and these sorts of things, I mean, President Trump he does like to think that he thinks outside the box, and in places like the Middle East, he does, in fact, in many respects. And we saw that extraordinary breakthrough late in his first term, where he brought the Gulf states the recognition of Israel, and he's looking for some sort of grand bargain like that again, which is interesting. But it's just the inconsistency, I think, with which he deals with things, that sort of erratic nature that pervades all of his policies. It's difficult to sort of follow. But when it pays off, I suspect it pays off well. We'll just have to see. It's still pretty early days, in fairness.
Bloomberg's Michael Haidi there. Well, the European Central Bank is expected to lower interest rates for the 8th time in a year later on Thursday, bringing the deposit rate to 2%. The ECB is shifting from tackling elevated inflation to now a phase of unpredictability over the impact of President Trump's tariffs on prices. Bloomberg Economics sees policymakers retaining a dovish tone, though, to keep the door open for further easing later in the year. And on Europe, the EU Economy Commissioner Valdis Dombrovskis is seeing some progress when it comes to trade talks with Washington as negotiations race to prevent higher US levies from taking effect on July 9. But he also told us that the bloc will not hesitate to impose counter tariffs if the deal falls through.
We do see a negative economic impact from the tariffs already imposed on the EU by US, and also on uncertainty which those tariffs are creating, as we know that we are also not yet at the end of the negotiations. So correspondingly, we saw it as one of the factors slowing down European Union economic growth this year, and correspondingly we expect only EU economy to grow by 1.1% this year. So from European Union side, we are willing to find a mutually acceptable solution with United States as regards the tariffs, also to put an end to this uncertainty and to avoid further also global economic fragmentation.
If you guys cannot reach an agreement by this, at least the deadline that the U.S. has put on you for next month, have you prepared a package of retaliatory tariffs against the U.S.?
Well, as you know already, when the steel and aluminium tariffs were introduced by the Trump administration against the EU, we already prepared the first set of countermeasures, counter tariffs, but we also suspended these counter tariffs to give negotiations a chance. But we had reiterated that if we are not able to find mutually acceptable solution, we are ready also to put those counter tariffs in place. As regards the first package, which was our response to steel and aluminium tariffs, but also broader package, which is a response to already further tariffs which had been imposed on the EU. But right now we are still negotiating. Actually, exactly today, our Trade Commissioner Maroš Šefčovič is in negotiations with U.S. Trade Representative Mr. Greer, and they are making progress.
Commissioner, at the same time, China has announced an agreement to buy Airbus planes, potentially 300 of them. And I wonder how much, while trade negotiations are going on with the U.S., the European Union is moving forward with some sort of discussion with China about tightening ties there.
Well, as regards China, it's worth noting that China is second largest EU trading partner after the US. So obviously for us it's very important to have our transatlantic relations, and including trade and investment relations, on track, but obviously also relations with China are important.
It's EU Economy Commissioner Valdis Dombrovskis speaking with Bloomberg's Romain Bostic and Lisa Abramowicz. Other political stories that we're following: for the first time in 6 years, the Indian Prime Minister may miss the G7 summit. This is being attributed to frosty ties between India and this year's host, Canada. Sources tell us that Prime Minister Modi has not received an invitation yet from Ottawa but officials say Modi is unlikely to attend even if invited. India is not a member of the G7 but has been invited to every summit since 2019. NATO is set to hold a summit on military spending later this month as leaders seek to win over President Trump with a pledge to boost defence budgets. Sources say leaders of the bloc are likely to agree to Trump's demand that member nations allocate 5% of economic output to defence. The summit will also address Ukraine's ties with NATO, with Secretary General Mark Rutte inviting Ukraine to the gathering on June 25. The US Education Department said Columbia University no longer appeared to meet accreditation standards due to its violation of federal anti-discrimination laws. Secretary Linda McMahon claims the school acted with what she called deliberate indifference towards the harassment of Jewish students as pro-Palestinian protests roiled on campus. Columbia, for its part, says it's committed to combating anti-Semitism. More ahead on the Asia trade. This is Bloomberg.
Well, it is a big day when it comes to those that are fans of Nintendo's gaming systems, right? This console, the Switch 2, this is the first gaming system that's new in 8 years from the company. The global launch is today, on Thursday. The company is planning to sell 15 million Switch 2 units by next March. Some estimates are sort of more towards 20 million, will retail for $450 in the US. That is a 50% increase over the predecessor.
Big price jump. There's some early reviews of this console already starting to trickle in. Some people saying, well, it feels like an upgrade. Is it worth $450 for an upgrade? An open question about that, but some very good reviews on the first games, particularly Mario Kart, getting very, very warmly welcomed there. But in terms of specs, we've got a bigger screen, 7.9 inches. Game chat allows up to 12 users at a time to share their screen, and an NVIDIA graphics chip in there. It supports ray tracing. Basically, this makes images look more realistic due to the way that light hits them. So it's just a much better gaming experience. Users should see a much better performance over the original. But yeah, it's going to be interesting about that price point, isn't it? Whether that's going to persuade users to get a new console or keep the $450.
Yeah, it's interesting. Margins on sort of consumer electronics generally tend to be lower than other products, and particularly true when it comes to the Switch 2. The wholesale price allows for some pretty slim markups, if you will. So retailers, though, still obviously very keen to sell this product. Best Buy, GameStop will both be open from midnight for that release on the evening of June 4th. Best Buy hosting events in its parking lots. We've got trucks full of games for fans to play over the weekend and throughout the summer as well. So it'll be quite the fanfare. Nintendo also holding a lottery for those consoles at its retail locations in places like New York and San Francisco. There's a limit of 1 unit per buyer. We're seeing, of course, a lot of other events as well, particularly in Japan. 2.2 million applications were submitted for the lottery on pre-orders there. Much more than what the company could obviously fill.
Yeah, certainly a lot of early interest in this. It's whether that interest can be maintained into 2026. Anyway, let's take a look at what markets are doing.
Yeah, let's take you to US futures. It was a pretty kind of muted session, some modest gains, if you will, overnight, even as sort of the global equities saw a little bit more energy than the Wall Street session. We're seeing S&P futures looking pretty flat at the moment, about 1/10% lower when it comes to NASDAQ 100 and S&P futures a piece there, and Dow also down by about the same tune. More ahead on the Asia trade. This is Bloomberg. Watching Japan this morning as we get that key wage growth number coming through, and in fact it was a bit of a disappointment on expectations, lower than estimates, with April cash earnings rising 2.3% year on year compared to the median estimate of 2.6%, between 2 to 3% across 17 economists. Adjusted for inflation, real wages coming in at a contraction of 1.8% year on year. The estimate was for 1.6% there, and total wages on a same sample basis gaining 2.6%, a little bit softer softer than what we saw in the previous month. So Bloomberg Economics had expected to see a pickup of 2.9%. Looking at some of that growth coming from calendar effects in particular, we did see wage growth pretty subdued in March as well, with those lingering leap year effects that we see continuing to pay out, and the sort of the time that salaries were being paid across late February had an impact there as well. So full-time workers' base pay growth is one that we watch pretty closely. This is a measure preferred by the BOJ, and we are seeing seeing a little bit of weakness there as well. Overtime hours looking unchanged from March. Remember, Governor Wader said that the rise of around 3% in that particular gauge of full-time worker base pay would be consistent with that 2% inflation target.
Well, President Trump is positioning a personal discussion with China's leader Xi Jinping as the key to preventing the world's largest economies from spiralling deeper into their trade and technology fight. The White House said on Monday that a call could happen this week, but the lack of a Chinese response appears to be keeping the president awake at night. In a social media post after 2 a.m. Washington time, he said the Chinese president is very tough and proving hard to make a deal with. For more on this, let's get to Anna Ashton, founder of Ashton Analytics. Anna, feels like we've been waiting a long time for a phone call between Xi and Trump when it comes to trade. There doesn't seem to be any sense of urgency on the Chinese side to pick up the phone. What's the strategy here?
Thanks for having me, Paul. You know, we have been waiting a long time in the sense that the Trump administration has been dangling the prospect of a mano-a-mano meeting between Trump and Xi, or a call between the two of them, since really the beginning of this administration in January. But that's never materialized. And I think that at this point, the strategy is probably that the pressure that China is exerting on the U.S. seems to be working. The president seems a little bit desperate. So why not let him sweat it out a little bit longer, so that the leverage actually produces some sort of result that is good for China?
Yeah, obviously the standoff isn't ideal for either country, but which economy can endure more pain at this point, the US or China?
You know, it's hard to say which economy overall could endure more pain. I think you're right that this is bad for both economies, but politically, the automotive industry having work stoppages would be terrible for the Trump administration. This is a key constituency for Trump voters. So this isn't something that the president wants to see happen. It's something that he probably genuinely is rather desperate to prevent. And those work stoppages will happen if there aren't significantly more rare earths arriving in the United States from China in the near future.
I know it's an interesting question in terms of who blinks first, right? And we've seen this kind of position of strength being built by Xi Jinping, and I guess historically, culturally, there is that sense of, you know, being able to withstand quite a deal of pain when it comes to the Chinese economy and the Chinese people. How much has he actually benefited from the sort of nationalistic rally and galvanization in this case?
Xi Jinping?
That's right.
Or Trump? You know, I think he benefits from not having quite such a difficult political climate to manage, it being a state that is not a democracy, right? So I'm not sure that he has gained necessarily all that much from playing into nationalism, but Trump's moves also play into Chinese nationalism. And certainly, you know, the fact that Trump has rolled out policies that are negative for China, that would hurt Chinese students, makes it easy for people to rally behind pushback policy on the part of Beijing.
There's a lot of other sort of peripheral issues that are at play here, and Beijing's reacted to some of them, including the visa restrictions, you know, the stricter checks when it comes to Chinese international students and the such. And it seems to be sort of a broader crackdown from the administration. But how sort of unhelpful are these sorts of things as well when you're presumably trying to get a trade deal done?
Well, it certainly doesn't seem like these things are very coordinated, does it, Heidi? I mean, you really have to wonder if the left hand is talking to the right hand here in the White House, because if if the trade deal is indeed the goal, which it certainly seemed to be during that early May meeting in Switzerland, then why add fuel to the fire in terms of things that are upsetting Beijing? Why create more tension in the midst of it? I think that these are separate strategies reflective of separate sets of interests and also separate kind of camps within the Trump administration of people who think about the China relationship very differently from one another. And one of the challenges for the business community in trying to navigate and predict what's going to happen next is that it's really difficult to tell which of those camps is going to ultimately have more influence over the president.
Well, of course, President Trump's trying to make deals elsewhere as well. Could we say that the prospects for, say, a US-India deal might look a little bit more promising? And what could the contours of that look like?
They might look more promising, Paul. I mean, certainly the relationship is on better footing. And there are very clear things that the two sides want, and some of it is relatively low-hanging fruit, at least compared to the challenges that are plaguing the U.S.-China relationship. You know, India wants a waiver from the 26% reciprocal tariffs. The United States wants more access for its agriculture products, for example, in India's market. An agreement like that, an agreement that is focused on, you know, a limited set of specific issues, I think is not unreasonable to expect given the tenor of the overall relationship. But the reality is that a broader agreement may be obstructed by the fact that the courts have recently made some rulings on Trump's use of the International Emergency Economic Powers Act to apply tariffs that make it seem like, you know, there's a possibility that the Supreme Court might say these aren't constitutional tariffs. We don't know yet when the Supreme Court will review them, but the rulings are really significant and they affect absolutely every single tariff that was rolled out on Trump's so-called Liberation Day, as well as all of the tariffs that have to do with fentanyl. So that's the vast majority of the tariffs that have been imposed by this administration so far.
Just quickly, Anna, we got the G7 in about 10 days' time. That feels like a natural environment for some sort of announcements with one of the US's more traditional partners. Are you expecting anything there?
I'm not particularly expecting some major breakthrough. I think the key thing to keep in mind there is that this time last year when the G7 met, they were talking about economic coercion in the context of China. This year, a lot of those same countries see the most significant economic coercion threat as the United States.
Anna Ashton, founder of Ashton Analyst. Really great to have you with us. And in fact, when it comes to some of these measures from the White House, we're now hearing breaking news that the Trump administration has put forth a new travel ban that fully restricts entries of nationals from 12 countries. According to sourcing from CBS News, these countries include the likes of Afghanistan, Burma, Chad, the Republic of the Congo, as well as other countries. Haiti, Iran, Libya, Somalia, Sudan and Yemen are also amongst them. There are also restrictions of entries from other countries as well. We had heard reporting that there were discussions underway to revive essentially his Muslim travel ban with some targeted changes after the attack in Boulder. We remember, of course, back in 2017 that we did have the first Trump administration putting in place a partial ban imposed on travelers from predominantly Muslim population nations, hence why it was labeled a Muslim travel ban by Trump and his aides at the time. We have heard, according to some memos that have been cited over the past couple of months, that the administration has been considering a revival of these travel restrictions for citizens of countries as part of this new ban. The previous information that we had a total of 41 countries in 3 separate groups. This looks like a smaller number of countries at the moment. The 12 main countries we've just been talking about, the likes of Afghanistan, Iran, Libya, and some of those others on that list as well. So we continue to bring you the latest in terms of what the implications are for travellers as well as governments, but it does look like this is something of a revival of the travel ban that we saw during the first Trump administration as well. More ahead on the Asia Trade. This is Bloomberg.
Federal regulators are investigating whether Tesla's full self-driving system is safe for public roads following a fatal crash in the US. And this comes as Elon Musk touts plans to launch a driverless taxi service in the middle of June. For more, let's get to auto reporter Keith Norton. So Keith, what do we know about the investigation so far?
Yeah, so it centers around this crash that happened in Arizona a couple of years ago when a 71-year-old grandmother and her adult daughter and a coworker were driving along the interstate between Flagstaff and Phoenix, and there was a setting sun that was causing serious glare, caused an accident. They pulled over. A Tesla Model Y came along, never slowed, and crashed into the grandmother and killed her. So that set off an investigation of the full self-driving system that Tesla has.
We also know sort of more details when it comes to a fatal accident that Bloomberg uncovered involving a Model Y. What sort of concerns does this raise over, these ambitious plans for robo-taxis in Texas later this month?
Yeah, Elon Musk is planning to launch a robo-taxi service in Austin, Texas on June the 12th. And there are still things to be worked out with the technology that he has in his cars, and that's what federal regulators are looking at. They had investigated a previous version called Autopilot, and that resulted in the recall of 200,000 cars. So now they're looking at this full self-driving FSD technology, and that investigation remains open.
Well, there's a number of different competing self-driving technologies out there. How is Tesla's autonomous tech different than others, like Waymo, the self-driving cars from the Google parent Alphabet?
Yeah, so, the interesting thing is that Elon has really bet on a camera system. All of the sensors he uses are cameras, whereas Waymo uses cameras, radar, and LiDAR, which help overcome things like sun glare. Elon has said that they have had technological breakthroughs and all they need is cameras, but that remains sort of a controversial choice in the technology community because most autonomous vehicles are outfitted with radar and LiDAR in addition to cameras.
Bloomberg's Keith Norton there, and you can read the full story on the big take by turning over to the terminal or by heading over to Bloomberg.com. And we do have the latest details when it comes to this Trump travel ban, as the number of countries. The statements from the White House say that they've determined to partially restrict and limit the entry of nationals from 7 countries and fully restrict and limit the entry of nationals from 12 countries. Those 12 countries include the likes of Afghanistan, Yemen, Somalia, Libya, Iran, Sudan, Haiti among them. And this sort of harks back to what we saw in 2017 with that first travel ban that was put in place by the first Trump administration that targeted a similar number of countries. But we have heard over the last few months that there has been discussions within the administration in terms of considering issuing these travel restrictions for dozens of countries as part of a new ban. That particular conversation centered around 41 countries in 3 separate groups, and we have had details about some of those countries now being the target of this new proclamation to ban travel from these nations. The travel is to be banned from certain countries on national security risks, including that full restriction of entry of nationals from those 12 countries, including the likes of Afghanistan, the Sudan, Somalia, Libya, Iran, Haiti, and some of the other countries like Yemen and the Republic of the Congo, as well as some partial restrictions to other countries. Those on that list includes Turkmenistan, Venezuela is one of them, Sierra Leone, Togo, Cuba, Laos, and Burundi as well. So this is a breaking story, of course, as we learn more about Trump's new travel ban that has been announced from the White House now. More ahead on the Asia trade. This is Bloomberg.
take a look at futures as we count down to the open in Australia, Japan and Korea. We've got Nikkei futures looking a little bit softer at the moment, perhaps a function of a strengthening yen right now, 142.76. We've got S&P futures looking a little bit softer as well. Markets in the US were quite flat today, and flat is the word of the moment ahead of the open here in Australia as well. We've seen yields slipping a little bit as well. We had some weaker than expected US services activity and contracts for the first time in almost a year. Markets now waiting for non-farm payrolls tomorrow, and bets increasing that we're going to see Fed easing start in September. Well, Carlyle Group partner Steve Wise says companies without direct exposure to US tariffs should use this time to be more aggressive as others retreat. Speaking to us exclusively at the Super Return Conference in Berlin, he also explained how CEOs are coping with trade tensions.
We just, fortuitously, we had a forum with our CEOs, about 40 of our CEOs just a few weeks ago. I think the reaction back then was, wow, just trying to understand the magnitude and the severity of the tariffs. It kind of caught a lot of people off balance. But in the last few weeks, they've had a chance to catch their footing. I think a lot of CEOs, certainly our best CEOs, have found their footing in this moment, and they've kind of gone through a playbook. You know, the first thing is assessing the risk. You know, for those that have direct tariff risk, what is that and how do you assess it? That's been done. That happened in a few days. Then it's how do you shore up your supply chains? How do you find, get vendor concessions, alternate supplies? A lot of that's been done, and some price increases to the extent you can do it. The third thing that they've done is look at their balance sheet and their liquidity and make sure they can endure, you know, what could be another change to the tariff situation. And it's also a really good time to find a way to cut costs. It's hard to cut costs in really ebullient times, but in times like this, it's an opportunity to tighten your belt. The fourth thing that they've done, and the most important, is staying close to the consumer, the customer, and seeing what the customer wants and what the customer needs. A lot of our company's competitors had a haphazard reaction to the tariffs and increased prices very quickly, which really made customers upset. A lot of our better companies didn't do that. They talked to their customers, they figured out what was needed, and they're able to take a lot of market share. So that was, you know, hugely important. And the last piece is just investing in their business, being more aggressive, and being having their foot on the gas when others are retreating.
That's interesting, because what we've heard from a lot of businesses is now is the time to pause, to not be spending capital, to wait things out. Is that not what you're telling your CEOs to do? You're saying go full forward, and now is the time to invest in yourself?
For companies that have a lot of tariff exposure, and that's a very small part of our portfolio, we want to make sure those first things that we said are in solid shape first. But for a lot of our companies, which are service-based, U.S.-only based, which are in technology, they're in healthcare, they're in financial services, they don't have a lot of direct impact. We're asking them to lean in and be aggressive while others are retreating.
Carlyle Group partner Steve Wise, they're speaking exclusively with Bloomberg's Danny Berger. Let's get you caught up with the latest on the corporate headlines. And Bloomberg has learned that China is considering placing an order for hundreds of Airbus planes as soon as next month. Sources tell us Airbus is talking with Chinese airlines about the size of a potential order, which could involve around 300 planes. A big order would be a significant blow to Boeing, which has struggled to make sales in China. Chinese social media giant Xiaohongshu has seen its valuation surge to $26 billion in recent market transactions. The price tag emerged through a GSR Ventures Fund document that shows shares changing hands. The platform, known in English as Red Note, has gained traction among investors as Beijing unwinds its crackdown on the tech sector. And we will be taking a look at how the broader trade tensions are affecting Chinese shopping platform Meituan, where we'll be speaking to the Vice President, Yin Mao. We'll don't want to miss that conversation, taking place on Friday at 7 a.m. Hong Kong time, 9 a.m. here in Sydney, Paul.
Well, we've got President Trump in the Oval Office at the moment. He's got that black Sharpie out again. He's signing a number of executive orders, some of which we kind of knew about, signing a proclamation to restrict Harvard foreign visas. So that really just puts the stamp of authority on this. But more recently, this idea to restrict travel from 12 countries from entering the U.S. So this is reinstating, well, another version of the travel ban, Heidi.
Another version of the travel ban. It's a flurry of activity from the White House, right? We're also hearing, of course, this intention to investigate the executive actions under Biden's presidency as well. We know some of that has been going on, particularly when it comes to the criticism over the CHIPS Act, for example, but a great deal of confusion now as to what happens with that, given the sort of comments we've heard from Howard Lutnick overnight. The other thing that we're watching is, of course, the situation in Gaza. We're hearing now from Marco Rubio confirming that veto of the UN Security Council resolution on Gaza. We knew that from sort of earlier in the day, where we saw Russia, China, France and the UK all voting in favour of immediate, unconditional and permanent ceasefire, but the US vetoing the resolution for unconditional Gaza, an unconditional ceasefire in Gaza at the US Security Council vote. So 14 remaining countries on the Council voting in favour, with the US vetoing that resolution for the ceasefire in Gaza. It is a resolution that also called the situation there catastrophic and demanded the immediate and unconditional lifting of all restrictions when it comes to humanitarian aid into the area, the safe and unhindered distribution at scale by the UN and humanitarian partners. This marks now the 5th time the US has vetoed a draft ceasefire resolution at the UN in order to align with Israel. The last one was back in November, Paul.
Okay, well, let's take a look at what to expect ahead of the market opens in Japan, South Korea and Australia. They get going in a little over 5 minutes' time. So we've got a much stronger yen there, as you see, 142.82, but it's been moving around a fair bit in that range over the last few weeks. We could see that weigh on the open in Japan. We do have futures for the Nikkei looking a little bit softer right now, but futures everywhere, to be fair, are looking a little bit softer. It was a very mixed session for the US as well. US dollar weakness continuing to be a theme. You see it there, 114.19 against the euro. Not a lot of change there against the offshore yuan either. And as we mentioned earlier, President Trump still waiting for China to pick up the phone and make a bit of progress on trade talks, Heidi.
There's a lot going on, isn't there? And as we kind of deal with the frenetic pace of decision-making and announcements from the Trump administration, so far this morning we've had that proclamation to restrict foreign visas for Harvard. We've had the veto of the UN Security Council resolution on a ceasefire in Gaza. We've had the, as you say, kind of the version 2.0 of the Trump travel ban that we saw back in 2017, right, again targeting a lot of these sort of Muslim population dominant countries again, as well as the directed investigation into executive actions taken during the Biden presidency. So a lot for markets to contend with as we head into the start of trading in Asia in the next few minutes. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. It's been a frenetic morning so far in terms of just the sheer amount of action that we've seen from the Trump administration. Some of it was sort of rehashing what we knew had been in progress, such as this, investigation into the executive actions of the Biden presidency, but also some of these other developments, another travel ban.
Mm-hmm. Yeah, and against that backdrop as well, just ongoing infighting about the fate of the big, beautiful bill. Elon Musk sniping from the sidelines has some pretty strong.
Is over.
Yeah, he's got some strong opinions about the beauty of that bill and particularly its impact on US debt. So that's bubbling along as well.
Bubbling along indeed. In the meantime, markets continue to bubble along the best they can. Of course, global equities are doing quite well at the moment, even as we had pretty soft sort of session that we had overnight. Some muted gains, I should characterize that as, when it comes to Wall Street. We had some interesting wage data out of Japan a little bit earlier on in the past hour. Broadly, the headline numbers looked a little bit softer than expected, but the key gauge that the Bank of Japan watches out for actually held up pretty well. So if that is still sort of consistent with their path towards 2% inflation, then the BOJ potentially is still sort of on track, as it were. The Nikkei 225, though, opening out of the gates softer by about 0.5% there, as we also see a bit of downside there for the topics. Dollar yen holding at that 142.75 level there. The dollar in the overnight session falling really to a session low after what we had separate corporate readings that were softer on the US economy. Private sector job growth came in weaker. Services activity also lagged estimates as well. That pulled down Treasury yields, of course, across the curve and really pulled back into question this idea of perhaps we could get a couple of Fed easing measures this year. Also watching Japanese yields, of course, it has been sort of such a source of contention, particularly with these key auctions that we've had recently, Paul.
Yeah, let's take a look at how we're tracking in the open here in Australia. Of course, the staggered open, so let's give it a break for a minute. We're kind of flat right now. We're seeing some reasonable gains, though, for a couple of stocks, including BlueScope Steel. If we take a look at how yields are tracking as well, we've seen yields slipping a little bit in the US session. 2 to 10-year yields at their lowest now since May the 9th, and we're seeing that trend continuing at the moment. We did get some data out of the US, weaker than expected services activity. That contracted for the first time in almost a year. Private sector jobs growth showing weakness as well ahead of the non-farm payrolls tomorrow. The market now seeing 2 rate cuts this year, the first being in September. Word on the oil price as well, that's stopped defying gravity, slipping a little bit. Saudi Arabia saying it wants OPEC Plus to just keep on carrying on with those production increases in the coming months. Saudi Arabia interested in recapturing market share, and we saw US crude inventories falling last week by the most since November.
And Paul, we're also watching Korea very closely, of course, the aftermath of the election result. Pretty sort of confident result, right? The clear victory of Lee Jae-myung in the South Korean presidential election. According to the likes of Goldman Sachs, feeling pretty bullish. They expect that to boost the country's stocks and currency, according to those strategists, largely because the party now controls both the executive and the legislative branches. So that cabinet formation should be swift, and substantial fiscal stimulus is expected. They're also expecting that renewed US-Korea trade talk situation, more progress. This is really key when it comes to the broad corporate governance reforms is all expected. So according to Goldman Sachs, saying all of this should ultimately aid in narrowing that long-held Korea discount in both equities and the currency. So we are seeing some upside there in the aftermath of that pretty clear, concise election result of 0.7%. Paul, I guess this is the idea that the political turmoil, at the very least, of the past few months, or the past 6 months, is now firmly behind them.
Yeah, let's get some more on this. We're joined now by Dayeon Hong, multi-asset portfolio manager at Shinhan Asset Management. And Dayeon, thanks so much for joining us. I just want to get your thoughts on how the Kospi's tracking. We're well off those April lows now. Is the top in, or we've got likely fiscal support coming, dovish BOJ, Bank of Korea, I beg your pardon. Is this all fully priced, or could there be more to come as the new administration starts to enact its agenda?
I think there will be more. We are in the boat also to be overweight Korean equities right now. After months of political uncertainty, Korea finally has a new president, and I think investment community is cheering for that. The new government, as you've earlier mentioned, is likely to quickly push for supplementary budget. The size is expected to be around 35 trillion, which is not small. And the cabinet formation, parliamentary hearings, all are likely to be swift, allowing the supplementary budget to be implemented as early as July. The fiscal boost is obviously positive for growth, positive for equity outlook. One of the key noticeable outperformance we saw yesterday was the financial sector. You also mentioned about the amendment of commercial codes, some of the key financial market reforms. And I think this is where the investment community is really focusing on to improve minority shareholder rights. So all this really allows us to be confident in overweight positions in Korean equities.
We're also seeing reports that a phone call between President Lee and President Trump could happen as early as today. This is obviously a priority for South Korea, is getting a trade agreement sorted out with the US. How much optimism do you have around that, and how much of a tailwind could that provide for Korean stocks?
To be honest, trade negotiations, as we have seen in the past few months, is really unpredictable. But we know that there is trade agreement already in place. So I'm not expecting a huge downside risks coming out of that, and the government will obviously try to negotiate as best as they can. So we could see, in terms of investment implications, we could see some downside risk temporarily, but I think that will actually give Korean equities an opportunities to buy.
Dayeon, I wanted to get your view when it comes to the corporate governance reform story in particular for Korea. There's a lot of optimism here, but if you compare to how long Japan took to get to this point and the enthusiasm we're now seeing for Japanese equities, how long do you think it could be for Korea and to sort of play that catch-up?
It's a long-term push, and I don't think it will happen in a very quick period of time. However, it's the push and the determination, and the government also having the majority of the Democratic Party as a majority of the parliamentary seatings. So that will allow them to really easily push for whatever is needed to really reduce that Korea discount. So I think the optimism can stay for at least a few months, and we'll have to see how much of that is really followed by the actual passing of the law. But at this juncture, at least in the short-term view, I think it could attract a lot of investors, especially from overseas, who may not have that overweight positions right now. We've seen a huge 1.5 trillion inflows into Korean equity market from overseas just one day yesterday, and so I can see some of that shift from foreign investors as well.
I wanted to get your views on bonds, particularly where you like holding duration at the moment. We've got another pretty key 30-year auction in JGBs that we're looking ahead to today. Does the correlation when it comes to ownership between treasuries and JGBs give you a bit more caution, and therefore does it make something like Korean bonds, for example, more appealing?
Yeah, that's a great question. I think Korean bonds may move quite independently of U.S. Treasuries and JGBs at this juncture, because we are expecting sizable increase in issuance in bonds due to supplementary budget. So I would wait until we know the exact number of supplementary budget in terms of investing in Korean bonds. Now, JGBs, there was a lot of concerns surrounding high JGB yields the past few months, and we finally saw the government come out and say they will trim that super long JGB issuance. I think it was 27th of May that news came out, and we've seen intraday 20 basis point lower 30-year JGB yields moving 20 basis point lower, and that, to me, was a trigger and an entry point to buy U.S. Treasuries. Now, there are a bit of differences between JGBs and U.S. Treasuries, obviously, because JGB is mostly held by domestic investors. But Japanese investors are one of the main holders of U.S. Treasuries, and the Japanese yields matter from Japanese investors' point of view when purchasing treasuries. So when we see JGB yields fall substantially, it gives me a cue also how the U.S. Treasury could move.
Dayeon, can you give us your outlook for the Korean won as well, which continues to strengthen against the dollar? It could be as much a story about dollar weakness as anything else. And does that make you more enthusiastic about Korean equities as well, and not just Korean equities, but emerging market equities more broadly?
Yeah, we are bullish on Korean won. That's why we, in a global portfolio that we have, we are overweight Korea versus other countries like the US. That gives us more exposure in Korean won too. So I guess it's similar for overseas investors. When looking at Korea, it's not just the return from the equities itself, but there's also potential to gain from Korean won. Last year, a lot of the weakness was driven by domestic retail investors purchasing U.S. equities. It would depend on how the stock market would be like for the rest of the year, but that amount of purchase going out from Korea to U.S. obviously had slowed down, and so I think that there's a less pressure for dollar won to go up. And with the broader dollar weakness, I think there is a room for Korean won to rally even more.
Dayeon, really great to have you with us. Dayeon Hong, who's a multi-asset portfolio manager at Shinhan Asset Management. We do have more ahead on the Asia trade. This is Bloomberg. President Trump says Vladimir Putin has warned him that Moscow plans to retaliate against Ukraine following recent drone strikes deep inside Russian territory. Trump and Putin spoke by phone as US efforts to broker a peace deal show signs of stalling. That's Bloomberg's Michael Heath. So it's quite interesting, President Trump kind of playing the messenger here.
Yeah, I mean, it's sort of surprising because on one hand, Ukraine's attack was obviously really, did some pretty significant damage to Russia's its strategic fleet there. And as I mentioned earlier, the sourcing the parts to repair some of those planes, which are really dependent on Western technology now. Russia doesn't make that sort of stuff anymore. It's going to prove problematic under the sanctions. But yeah, you sort of, when President Trump sort of broadcasting this, as Bloomberg reported it, that Putin plans to retaliate, that the US wouldn't in some way warn him against it or make any point there. I mean, Russia has been bombarding civilian areas. It's been on the front foot with Ukraine the whole time, so the notion of it needing to retaliate seems strange, and it just seems that President Trump still hasn't quite crossed this barrier of realising that he doesn't share anything particularly special in terms of a relationship with Putin. It's all cold hard politics, and yeah, that this his post sort of seems to suggest that hasn't changed yet.
We've also got a situation where the UN Security Council has demanded an immediate and permanent ceasefire in Gaza. It's been vetoed by the United States. Why?
Yeah, Secretary Rubio put out a statement, and basically his argument that the wording of it sort of creates this false equivalence of Israel and Hamas kind of thing. But the main thing it seems the US wanted was this, the inclusion of the Hamas disarms that it leaves, that it basically, that it provides equal weight there. It's not just Israel that's the problem here. But it sort of speaks to a broader point as well that, outside of the US, which is obviously massively important, Israel is increasingly isolated in the world. And, the sympathy, the global sympathy, which did last for quite a long time, and it was a horrific attack on Israel. There's no question about that. But just the extent of the war and the amount of force that's being used now, etc. It's really grating, it seems, on the world, and the images are horrific as well. So. Yeah, I mean, look, on one hand, the US supporting Israel is sort of not unexpected, but it almost sort of feels perfunctory too, because I'm not sure the US is particularly happy with what's going on there. Again, a bit like Ukraine and Russia, this is just an intractable issue at this point.
All right, Bloomberg's Michael Heath there. Coming up later on Insight with Haslinda Amin, former Australian Prime Minister Malcolm Turnbull will weigh in on President Trump's efforts to reshape the global political and economic landscape. You can catch that interview at 11:15 this morning in Hong Kong. That is 1:15 p.m. in Sydney. This is Bloomberg. Bloomberg has learned that China is considering placing an order for hundreds of Airbus aircraft as soon as next month, when European leaders visit Beijing to celebrate the country's long-term ties. Katrina Nichols, who leads our Asia transport coverage, joins us now with more on this. So, Katrina, how significant is this deal for Airbus?
Yeah, well, look, it is very significant because of the magnitude of the deal. We're hearing that as many as 300 planes could be involved, and one person familiar with the matter saying that could even stretch to as many as 500 jets. So very significant for Airbus. Airbus has been steadily increasing its share of sales in China, and that's helped by the fact they've got this final assembly line in Tianjin for its very popular A320 family of aircraft. I think also it would allow Xi to send quite a strong message to Trump over trade. You know, we've got French President Emmanuel Macron among leaders that may visit Beijing in July to mark 50 years of diplomatic relations between China and the EU. And France and Germany are two big shareholders in Airbus. So I think inking that sort of deal, you know, when the US and China are at loggerheads over trade would probably send Trump a real message.
In terms of the potential magnitude of this deal, how does it rank against sort of other, you know, sales deals that we've seen?
So should the order run up to 500 planes, it would certainly rank as one of the biggest ever globally, and certainly also the largest for China. There was a deal for about 300 single-aisle jets, Airbus jets, that was made back in 2022. That was worth about $37 billion at the time. So that gives you the sort of scale of at least the dollar figures that we're talking about here. In terms of other really large aircraft orders that we've had over the more recent years, Air India, they inked a purchase for 470 Airbus and Boeing planes back in 2023, and a little bit later that year, in around June 2023, another Indian airline, a lot of growth in that market, placed a record-breaking order with Airbus for around 500 narrow-body aircraft. So anywhere between 300 to 500 is really going to put this potential deal up there as one of the world's biggest ever.
Katrina, let's talk about who this deal is not with. It isn't with Boeing. How significant is that?
Yeah, well, Boeing hasn't actually won a major order from China since at least 2017. And this is due to, you know, quite a number of issues, not only the trade tensions that I mentioned before, but also several sort of what you might call self-inflicted issues. If listeners recall, you know, back in 2019, China became the first nation to ground the MAX, the 737 MAX, following those two deadly crashes. And then there were trade disputes with Biden, and even in the first Trump administration, that also helped tilt any aircraft orders that we did see come out of China toward Airbus. And then, you know, as recently as January last year, Boeing suffered another sort of huge quality control crisis when a door plug blew off Atlantic flight mid-flight, and that forced Boeing to slow output and really dented its reputation among the flying public again. So definitely this is a big win for Airbus if it comes to fruition, and I suppose you would say another setback for Boeing.
All right, Katrina Nichols, who leads our Asia transport coverage. Well, Carlyle Group partner Steve Wise says companies without direct exposure to US tariffs should use this time to be more aggressive as others retreat. Speaking to us exclusively at the Super Return Conference in Berlin, he also explained how CEOs are coping with trade tensions.
We just, fortuitously, we had a forum with our CEOs, about 40 of our CEOs, just a few weeks ago. I think the reaction back then was, wow, just trying to understand the magnitude and the severity of the tariffs. It kind of caught a lot of people off balance. But in the last few weeks, they've had a chance to catch their footing. I think a lot of CEOs, certainly our best CEOs, have found their footing in this moment. And they've kind of gone through a playbook. You know, the first thing is assessing the risk. You know, for those that have direct tariff risk, What is that, and how do you assess it? That's been done. That happened in a few days. Then it's how do you shore up your supply chains? How do you find, get vendor concessions, alternate supplies? A lot of that's been done, and some price increases to the extent you can do it. The third thing that they've done is look at their balance sheet and their liquidity and make sure they can endure, what could be another change to the tariff situation. And it's also a really good time to find a way to cut costs. It's hard to cut costs in really ebullient times, but in times like this, it's an opportunity to tighten your belt. The fourth thing that they've done, and the most important, is staying close to the customer, and seeing what the customer wants and what the customer needs. A lot of our company's competitors had a haphazard reaction to the tariffs and increased prices very quickly, which really made customers upset. A lot of our better companies didn't do that. They talked to their customers, they figured out what was needed, and they're able to take a lot of market share. So that was, hugely important. And the last piece is just investing in their business, being more aggressive, and being having their foot on the gas when others are retreating.
That's interesting, because what we've heard from a lot of businesses is now is the time to pause, to not be spending capital, to wait things out. Is that not what you're telling your CEOs to do? You're saying go full forward, and now is the time to invest in yourself?
For companies that have a lot of tariff exposure, and that's a very small part of our portfolio, we want to make sure those first things that we said are in solid shape first. But for a lot of our companies, which are service-based, U.S.-only based, which are in technology, they're in healthcare, they're in financial services, they don't have a lot of direct impact. We're asking them to lean in and be aggressive while others are retreating.
That's Carlyle Group partner Steve Wise speaking exclusively with Bloomberg's Danny Berger. Other political stories that we're following: President Trump has signed a proclamation banning individuals from 12 countries from entering the US, reinstating one of the most controversial measures from his first term. And this comes in the wake of an attack in Boulder, Colorado that targeted a march in support of Israeli hostages. Second-term travel ban includes Afghanistan, Myanmar, Chad, Haiti, Iran, Sudan and Yemen. The measure also partially limits entry from 13 other countries. The US Education Department said Columbia University no longer appeared to meet accreditation standards due to its violation of federal anti-discrimination laws. Secretary Linda McMahon claims the school acted with what she called deliberate indifference towards the harassment of Jewish students as pro-Palestinian protests roiled on campus. Columbia, for its part, says it's committed to combating anti-Semitism. For the first time in 6 years, the Indian Prime Minister might miss the G7 summit. This is being attributed to frosty ties between India and this year's host, Canada. Sources tell us that Prime Minister Modi has not received an invitation yet from Ottawa, but officials say Modi's unlikely to attend even if invited. India, of course, not a member of the G7, but has been invited to every summit since 2019. More to come on the Asia trade. This is Bloomberg.
Take a look at Nintendo. It is a big day, of course. The launch globally of the Switch 2 console. High demand is expected. Retailers are organising events for gamers to try it out. There's been global lotteries that have been taking place, limits on how many units that people can buy as well. But of course, at the end of the day, this is going to be a crucial element for Nintendo. A strong debut is really needed for the console given the higher price tag. We're seeing a bit of downside in trading in Tokyo today for Nintendo stock. Let's bring in Bob O'Donnell, President and Chief Analyst at TECHnalysis Research. So the price tag, do you think it's going to be worth it in the minds of, enough consumers to make this a sufficient success?
Well, thanks, Heidi, for having me. And yeah, look, initially, of course, there's going to be massive demand for it. And like you said, there are huge lines and lotteries and people very eager to get it and looking for who is going to restock it because the first orders are commonly sold out in a lot of retailers around the world. So there's huge pent-up demand and excitement. I mean, look, Nintendo has done an incredible job of creating these very friendly and, for the most part, fairly affordable devices. And most importantly, of course, it's that games, right? It's all the Pokemon games, all the other games, the Mario games that they've created over the years that just keep their platforms so sticky. And people are excited to get a better version of the Switch with the Switch 2.
Bob, anecdotally, what are you hearing in terms of the level of enthusiasm, and how crucial is this going to be for Nintendo's business more broadly, given how long awaited this upgrade is?
Yeah, well, I mean, it's been like, 7-8 years in the making to Switch 2, and it is incredibly important. But, one of the big questions is how many people with original Switches are going to want to upgrade. Just on a personal note, I have 2 adult children, each of whom own the original Switch, love it. My daughter in particular uses hers all the time. And I asked them both, I said, hey, are you guys going to upgrade? And both of them were like, they're okay with their first one. And one of the concerns that my son raised actually was, he's like, look, the price of games, $80 or $90 versus the original games, were $60. That's a big price jump. Those are U.S. prices, obviously. That's a big jump for a lot of people, and there is a concern that the game cost could be a little bit of a detriment for certain groups of people.
Also, how exposed are these consoles to the whole tariff environment as well? Because these are manufactured in the countries that the U.S. has been targeting.
It's very true, Paul. And, look, there is as much subject to the tariffs as anything is these days, which could be anything and it could be nothing. It's hard to tell anymore. But obviously, that would be a big issue because, a lot of people who are buying these are younger. Their incomes are lower. In a lot of cases, it's kids or teenagers or young 20-somethings in a lot of cases. Of course, a lot of adults buy these too. But the point being that additional tariff cost could be a big factor for certain people. Now, look, the other thing I was going to say, the other side of my equation in terms of buyers, because it has been so long since that first Switch came out, you could argue like there's a generation of kids, half generation of kids out there that never had that exposure to the first Switch. I mean, the first one's been around, but this is going to feel fresh and new. And so hopefully there's a lot of excitement there. You've got some nice hardware ray tracing, better graphics, faster frame rates, 4K TV support. So there's definitely some enhancements there, and some folks are going to go for that.
I think the last console I had might have been an actual Game Boy, or maybe I didn't even own it. I might have just borrowed it from a friend. But Paul, I know that you own the previous iteration. Just as a straw poll, are you interested in upgrading?
Yeah, look, it's a good point. I'm a geek from way back. I've loved video games since I was a kid, and the technology just keeps getting better. But yeah, to answer your question, I do have the original Switch, but I'd rather keep the $450. So Bob, I'm like your kids in that respect. Yeah. Down the track, how does Nintendo keep sales rolling? Are we going to see discounts heading into Christmas, that type of thing?
I mean, I don't think we will. I think usually, especially with the first year of a new generation console, I think the prices are probably going to be fairly safe, again, depending on the tariff situation. But look, there's going to be new games that take advantage of the higher power, horsepower. It's an NVIDIA chip, by the way. It's a custom NVIDIA chip for this, which will help their gaming business in the long run. But we're going to see new games that take advantage of these higher frame rates, the higher resolution. And of course, now they have accessories. You're going to be able to get cameras to be able to watch other friends play. That's another capability you couldn't do on the first Switch. So, I mean, again, there's going to be a number of things out there that I think will keep the price points high and will trigger a certain amount of upgrades from existing users, but also I think will be a new opportunity for a lot of people who never bought into the first Switch and maybe have been doing PC gaming, which continues to be popular, but they like that interactive capability, the live chat, giving your friends grief as you're playing with them. All that kind of stuff is fun, and I think this becomes available here on the Switch too.
This conversation is making us all feel really old because, you make the fair point. The gap has been so long in developing this follow-up that there is, in fact, new generations of kids, actual kids, not just kids at heart, like the rest of us, who, might be a pretty strong demographic for Nintendo.
I think it is. Look, Nintendo has always done very well with young kids because they've had very family-friendly games, and everybody is comfortable playing these games, and parents are comfortable buying the devices with these games, the Mario Kart games and the Pokemon games and all of those. They're all very widely friendly to in any kind of culture. So I think that's where Nintendo continues to see their opportunity. And people, it's clear people love to game. I mean, I remember 10 plus years ago, people were saying, oh, it's going to be the demise of gaming consoles because people are going to do it on PCs, and most importantly, they're going to do it on smartphones. And sure, we see that, but that hasn't kept the console market from continuing to be an important force. And this is just yet another example. And of course, Nintendo is the key player here. And they have a great form factor, and it's portable and yet can plug into the TV. So it checks a lot of boxes for a lot of folks.
Bob, never mind buying the Switch console. Do you buy Nintendo shares? They've had a pretty good year so far.
Look, fair question. It's the big question mark that overhangs all of this, certainly for the U.S. market, is going to be any potential tariffs, and we just don't know. I think Nintendo is like a lot of other consumer-oriented tech stocks where there's a lot of uncertainty. It's just not clear whether or not those could be a big factor. I would argue, look, they have been proven to be pretty timeless. That is, the games and the consoles, which in the long run is a great thing. It means you get a lot of life out of these things. They've gotten unbelievable life out of Pokemon games and cards and all the other things that they do. And so I certainly think there's growth opportunities there, and that would depending on how you interpret that, that certainly seems like an incentive.
If you want to be that really fun parent, you can buy them NVIDIA shares instead of a Switch console. Your kids will love you for that. But Bob, we mentioned tariffs a little bit earlier. Clearly, there's still a lot of uncertainty, right? Things are changing from day to day. We know that parts of this are dominantly made in places like Vietnam and China that would be heavily hit if there is no longer-term resolution. I think Bloomberg Intelligence saw that price going up to somewhere close to $600 in that situation. Is that a risk that you're still watching, or do you think that the tariff situation, the supply chain situation, even pertaining to chips and such, may have calmed down enough?
Well, I mean, it's calmed down for now, but, 24 hours from now, it could be totally different. That's the problem. It's that uncertainty that I think has really been driving people kind of crazy. And you can't pretend like they've gone away. They haven't completely gone away. They're apparently on pause right now. And there's certainly this, chance that some of these tariffs could come back. I mean, the steel tariffs just kicked in. We'll see what happens. And the problem is that, ultimately, I'm a strong believer that the tariffs are not going to manufacture new jobs in the U.S. just because people want that to happen. These supply chains are so complicated and so complex and so interwoven amongst different countries. You're going to have to continue to have that to have a robust consumer device and other technology market. And I'm hoping that the administration is going to recognize that and move accordingly, and we'll see what happens. But to answer your question, you can't pretend it's not there and avoid it. So yes, I am still watching it, as I think most people in the tech industry still are.
All right, Bob, always great to get your insights. Bob O'Donnell, President and Chief Analyst at TECHnalysis Research. Thanks so much. And stay tuned for live coverage on Bloomberg TV and radio from the Bloomberg Tech Summit in San Francisco. Industry leaders are gathering to discuss how executives, entrepreneurs and investors can navigate the hazards and opportunities in today's business landscape. We're going to be hearing from Alphabet CEO Sundar Pichai later this hour. Haidi.
Let's take a look, of course, at how the trade war, even with this trade truce for now, affecting Chinese food delivery platform Meituan. We'll be speaking with their Vice President, Yinan Mao. Don't miss that conversation on Friday, 7 a.m. Hong Kong time or 9 a.m. if you're watching here in Sydney. More ahead on the Asia trade. This is Bloomberg.
Sentiment has changed. The whole tariff events have impacted mostly, I would say, the growth in the U.S. Market forces, the so-called bond vigilantes, have woken up those to the concern about the growing deficit in the United States.
They are starting to pause or slow down at least their allocations to the U.S. Bomb that people are watching is tax policies and potentially a tax war.
Right now, the big focus is on rates and the deficit, obviously, as the current administration is focusing on their big, beautiful bill.
And this is mainly the result of the global trade war, the risk, the tariffs, although not knowing exactly what the impact will be. But Europe certainly appears more attractive now.
And people are seeing Europe as a safe haven at the moment.
Some of our guests there at this year's Super Return Conference in Berlin with their views on European assets. For more, let's get now to our Bloomberg FX and rate strategist, David Finnerty. And David, we're on central bank watch again. It's the ECB up next. 25 basis point reduction seems pretty much nailed on at this point. But what are the implications here for the euro? Because we've got a weakening greenback as well.
Yeah, I think this is what he said. The ECB is widely expected to cut by 25 basis points. What the market's been looking forward to is what it signals moving forward. The market's pricing basically one more cut this year. Does the ECB, given the recent inflation data was weaker than expected, does it signal maybe the chance of two, or does it say no, one and done? Obviously, if it's one more additional cut, then that's already priced into market. So you go, it could actually be euro supportive. But as you said, it really goes to the dollar side of the equation now. And, what happens with the dollar? We saw the data come out last night, overnight, and, ADP data came in weaker than expected. I think even more interesting was the services data came in weaker than expected, the ISM service data. And remember, the US economy is a service-related economy. And you actually saw the data coming weaker, but the prices paid coming higher. So if you're in the stagflation camp or worried about stagflation, you would certainly look at that data and go, there's some proof of that. Now, of course, one piece of data doesn't make a trend by itself, but it's something to allude to. So I think going forward, your markets can look at what's payrolls come out on Friday, but certainly the idea of how is the US performing is still in debate because the data's coming out very mixed at the moment. If it's better, dollar rallies. If it's not, dollar weakens. And as a result, the euro goes the opposite side. So I think at the moment, where the euro goes, ECB is going to come and go. They'll very quickly move on US data, with non-farm payroll being obviously the most important piece of data this week.
So if we get that unemployment rate shifting up, maybe 4.5%. Do you think that's going to be enough to kind of further solidify these expectations of two Fed moves this year?
Yeah, I think the market has said, is priced in two, and the Fed has been pretty clear on it's like two is what we look at. The dot plot said two. Lots of Fed speakers said, look, we're not going before basically September because we need more data. But as you rightly allude to, the unemployment rate really of all the data is the key thing to look at, because that's what the one thing piece of data the Fed has said, look, that if we look at all this data, that's one that we are definitely looking at. If it does uptick, then it does raise the question is two, will it be maybe three? Do you go September and the other two meetings after that? The market always is very happy to price in rate cuts if you give it a chance. And obviously we have President Trump encouraging the Fed to cut rates. So I think if that unemployment rate does uptick, the market will go, well, OK, it is two, but there's a good chance it may be three before the year's out, even if we start in September. And obviously that would add to dollar weakness.
JGB is back in centre stage with another key auction. What are you watching?
Yeah, I think this is the key thing. JGB auctions for the last two, if you look at the 10-year and the 40-year, they both come out very different, one being very good and one being very bad. So the question is, OK, how's the 30-year come out? And obviously it's longer term, so you go, is it more like the 40-year, which was bad? But I think the question is about that. It's like, well, how does this auction come out? Because we have had mixed reactions recently. Obviously, if it comes out weak, and that's an if, I'm not saying it will, if it does, then that puts pressure on yields. And I would certainly say the 10-year, even though it's a 30-year auction, if you look at the 10-year yield, that 1.6 level is certainly, everyone's looking at that level, shall we say, if it was to breach that level. So I think today is going to be very interesting in terms of we've had good, bad. Is today the Goldilocks scenario where it comes in just right? So, time will tell, shall we say.
Bloomberg FX and rate strategist David Finnerty there with what we're watching today. More ahead on the Asia trade. This is Bloomberg.